In June 2025, while global aluminium prices softened, India's aluminium die-cast, which is ADC12 prices, went the other way, climbing steadily. And here's what's behind the surge. ADC12 imports have plunged by 92%, and with global scrap supplies tightening, prices had nowhere to go but up. So what's really driving India's ADC12 market? And what does it mean for alloy prices in July? Let's break it down: the data, the demand, the imports, and everything in between. Hi everyone, I am Neha and I am here to break down the numbers with rational. So, in June 2025, OEM-approved ADC12 prices stood at 2,25,000 rupees per tonne in Delhi NCR and 2,31,000 rupees per tonne in Chennai. That's 1,000 rupees per tonne jump month on month despite flat LME trends in early June. But why? Because domestic and imported aluminium scrap were both short in the supply. Supplier offers hovered between 2,33,000 to 2,35,000 rupees per tonne, while OEMs tried holding the line at 2,28,000 to 2,32,000 rupees per tonne in both Delhi as well as Chennai under a 30-day credit terms. The spread between scrap and ADC12 stayed firm in the 33,000 to 34,000 rupees per tonne range, indicating raw material tightness is holding prices up. India's aluminium scrap imports jumped 13% year-on-year, hitting 7,21,862 tonnes in the first 5 months of 2025. Most of this was taintable scrap, which was up by 16% to 1,66,230 tonnes. Meanwhile, the US continued to remain the top supplier. However, the US origin scrap fell 12% due to strong domestic demand in the country. Let's check what's happening globally. LME prices surged in late June, hitting $2,580 per tonne, driven by Middle East tension and higher energy costs. One of the toughest moves where the US president imposed a 50% tariff on aluminium but excluded scrap, triggering a surge in scrap shipments to the US. And that drove US aluminium premiums to a record high level. So what we got now? Global scrap became costlier and harder to find. Exporters like the EU are now debating scrap export duties. Meanwhile, recyclers argue that restrictions will hurt circular economy goals. Here's where things get interesting. India's aluminium ADC12 ingot imports crashed 92% in the first 5 months of 2025, from 9,963 tonnes to just 751 tonnes. The sharpest fall came from Malaysia, a top supplier. Imports were down 95% from 8,398 tonnes to 450 tonnes. All shipments from Malaysia majorly went to the southern India, especially Chennai. So, why did ADC12 shipments from Malaysia suddenly drop off? Well, even though India and Malaysia have a free trade agreement, the real issue was the BIS certification. Most Malaysian producers had applied for it, but the process turned out to be long. Bottom line, without that BIS approval, they just couldn't ship to India. Now, the one segment that's keeping this market afloat is the auto sector. In the first 5 months of 2025, the overall automotive retail sales rose 4% year-on-year to 10.8 million units, out of which the passenger vehicle sales reached 1.7 million units and the auto production grew 4% to 12.2 million units during the same period. But on a month-on-month basis, in May 2025, sales dipped 3% from April. High dealer inventories and heavy monsoons impacted sales in the north. Additionally, Maruti Suzuki dispatches dropped 6%, citing urban slowdown. Still, rural demand held strong and production stayed stable, offering hope that consumption of ADC12 will remain supported throughout the upcoming months. So what's coming in July 2025? Price pressures likely to continue, and the supportive factors are limited domestic scrap, import restrictions for ADC12 still unresolved, automotive demand largely remains steady. A major OEM has raised ADC12 settlement prices by 2,150 rupees per tonne month on month to 2,28,900 rupees per tonne for July, a level last seen in May 2022. The scrap to ADC12 spread narrowed slightly to 31,000 to 32,000 rupees per tonne, but prices are unlikely to cool significantly unless the BIS issues clear or global scrap market stabilize. So what did we get to know today? ADC12 imports are at record low, scrap remains structurally tight both domestically and globally. Auto demand is providing a soft cushion. Prices are holding despite macro headwinds. We can see this as a classic case of supply-side resilience meeting demand-side uncertainty. For buyers, that means higher cost pressures, and for suppliers, it's an opportunity to capitalize on tight markets. So stay tuned with BigMint for more insights on India's secondary aluminium and scrap market. Don't forget to like, share, and follow for data that moves with the market. I'm Neha. See you in our next decoding session.